Hello, I'm Terrel Platt with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis. Introducing a breakthrough in cattle deworming from Zoetis, the only prescription cattle dewormer with 2 active ingredients in 1 dose. Meet Valcor, doramectin and levamisole injection. Now you can achieve effective parasite control in 1 product instead of 2. It's never been easier to be tough on tough worms. Get tough today at valcortough.com. Do not treat cattle with Valcor within 15 days of slaughter, not for use in female dairy cattle 20 months of age or older, including dry dairy cows, not for use in beef calves less than 2 months of age, dairy calves, and veal calves. See full prescribing information at valcortough.com/PI. As spring approaches, the beef complex is shifting into what is typically one of the strongest demand periods of the year. This tends to lead to a higher seasonal trend for the cutout. The beef complex held together better than expected through the balance of February, with the composite cutout holding in the low 290s, which was around $15 per hundredweight above the lows established in early January. And meats and trimmings remained well supported in February, providing a lift to the cutout as a whole. Overall, the next 2 to 3 months, middles and trimmings will become the main focus as consumers fire up grills for steaks and burgers. Middles have yet to see considerable price appreciation, but the strip loin and tri-tip have been the first items to develop a firmer trend. 50 trimmings are a key component of the cutout and have carried a steady to higher price pattern, with more upside expected into the summer as well. Fed slaughter is forecast to hold 1 to 3% below year ago as carcass weight seasonally decline, which will lend towards tighter year-over-year production levels. The cutout is set to finish this week around $300 and is expected to mark a spring high between $315 and $325. A higher beef complex will be necessary to support the anticipated cash rally moving through the spring. Fed cattle prices spent the bulk of February in the low 180s, but are expected to gain traction as demand improves, moving forward against a manageable supply picture. The cash market is expected to mark a high between the upper 180s and low 190s in April or May. While live cattle futures have priced in a rally to these levels after completing the 618 retracement levels, cash performance is essential as basis begins to strengthen. Turning to this week's markets, trade was moderate in the north, mainly at 183 to 184.5 live, which is mostly steady, and 290 dressed, $2 lower than last week. Trade was moderate in the south at 183 live, steady to $1 higher than last week. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.